Hi everyone, this is Ashish with Investor Friendly CPA, and this is part 2 of the first video where we covered why S corporations might not be a right choice for your rental real estate. On the first video we talked about paying extra self-employment taxes and losing dead basis on your property. Now we will talk about 3 more reasons here. The third reason is related to contribution and distribution of assets from corporation. Let's talk about contributions first. And I'm going to compare this with the partnership. Okay. Normally when you contribute a property in a partnership, this is not a taxable event. However, if you do that in S corporation and if you do not control your S corporation, I think the percentage of control is 80% right now. If you don't control a corporation, there's going to be a gain recognition and you don't want that. And if you have a loss, if the market goes down and if you want to do a few tax planning with your losses are never recognized if you use S corporation. And this applies to both new and existing corporation. Let's talk about distribution, and this is one of the other main reason that you don't want S corporation. The property that's distributed out of S corporation is treated as a sale at the fair market value, meaning it's treated, the IRS assumes that you sold the property even though you just distributed to yourself. In partnership, you can take out the property without any gain, you don't have, without having to recognize any gain. But in corporation, you have to recognize the gain. You have to recapture depreciation, and the gain that's supposed to be a capital gain at the S corporation level might actually pass through as ordinary income if you're going to depreciate the asset on your hand. Yeah, don't get hung up with that. But it's just what I'm trying to say is it's bad to have a property from contributions and distribution perspective in an S corporation. And I personally have taken out a property out of partnership to refinance. That happens all the time. We have investors and lenders working together to refinance a property, and sometimes they want property out of the partnership. If it was a partnership, there's no taxable event. But if you have a property in S corporation, then you have to take it out for refinance, but you're gonna have to pay taxes on the gain. It's basically selling your property to third party, and you don't want that. So that's the third reason. Fourth reason is, this is complicated. I'm going to try to make this as easy as possible. You don't get step-up basis in S corporation compared to partnership. Okay. So, for example, if you buy a partnership interest that holds the asset, you can step up the basis of the partnership asset to take extra depreciation. You cannot do that with S corporation. That is as easy as I can put it together. So this is complicated. You're gonna have to talk to your advisor regarding this, but you lose or you don't get step up basis in S corporation. The third and the last reason I want to talk about is something called spatial allocation. You don't get spatial allocations in S corporations. So in real estate, we have seen, I have myself put a deal together where someone brings a sweat equity and someone brings all the capital to fund the deal. We can put real estate deals thousands of ways. Now, once the deal is, put together, in partnership, what you can do is you can do something called spatial allocation to equalize the economics of the deal, right? We can pay the capital partner all his money before everyone gets paid. All those kind of special allocation can be done. But in S corporation, you cannot do that. That's why we don't see many rental real estate in S corporation, because it's not very flexible when it comes to allocating income and losses to the partners. Partnerships, however, are very flexible on this aspect, and that's why we see partnerships on real estate. And not only because of this, because of all other points we discussed, but this is one of the other reasons too. So those are 3 additional reasons that you should not have rental real estate in S corporation. There are other few reasons that I'm not going to get into these videos. I want to mention that these are complicated topics and you do need to talk to your tax advisor regarding this. Don't just go and do this yourself since you watched a few videos online. So if you found this video, leave us a comment or ask any questions you have and we'll get back to you. All the links to connect with us are down below, and we will see you in the next video. Thank you for watching.